If you want to make $100,000, $1 million, $100 million, anybody can do it. Welcome to Real Estate Market Moves, where every week I bring you all the news, information, and insight you need for the commercial and residential real estate market. Whether you're looking to buy a house, invest in real estate, or you just want to know what's going on, this is the place to be. So let's jump in and get right to it. And let's start off with the weekly housing trends for the week ending in October 21 of 2023. So the bottom line is the median listing price grew by 0.2% over last year. So year over year, house prices are still up, even though we might get some monthly declines here or there. Year over year, housing prices are still up, and they're still up in most markets, 20 to 40% of where they were pre-pandemic. New listings, a measure of sellers putting homes up for sale, were down again this week. So we're seeing inventory shrink. Some of that can be seasonality. Most of it is the interest rate lockdown and the rising mortgage rates right now. It doesn't make sense for a lot of people to put their houses on the market because there's nothing to buy. There's no inventory out there. And the affordability index on housing is at record low levels, or at least levels we haven't seen going back a number of years, probably 40 years or so. But at the end of the day, year to date, the median listing price, that's the median listing price, is up 2.7%. New listings are down 17.2%. Active listings are up 24.1%. And the days on market are 11 days slower than they were year over year in 2022. But again, real estate's hyperlocal. Every market is different. We're seeing stress in some markets. We're seeing pressure on prices in other markets. But at the end of the day, the interest rate is the key. As long as rates stay higher, and the longer they stay higher, the more potential there could be at the end of the day to bring some inventory to the market, because people need to sell. So you're getting down to motivations where you have divorce, you have people dying, people moving. People need to sell eventually. Everybody has to sell, people move, whatever, reason, that's going to bring inventory to the market in the long run. So this is going to take some time to work out. Again, we've had 10 years of appreciation in the last 2 years. We've had basically 100% appreciation in housing prices over the last 10 years. So residential houses in general, on average, across the country have appreciated over 100% in 10 years. So that's just unprecedented. One of the biggest pieces of news to hit the real estate market in years is this lawsuit, this class action lawsuit ruling that came down against the National Association of Realtors and a couple of other large real estate brokerages on the class action lawsuit. It was against the National Association of Realtors, accusing them of violating the law by conspiring to inflate commission rates. The jury ruled in for the plaintiffs for a total of $1.78 billion in damages. The class action lawsuit alleged that organizations such as Keller Williams, Home Services of America, and the National Association of Realtors violated the law by conspiring to inflate commission rates. This was a school teacher that had sold a home, had paid a 6% commission on the home. The buyer's agent's share of the commission amounted to 21% of her net equity, effectively consuming 40% of the equity she had accrued in the property. During the trial, which lasted 2 weeks, they reportedly said it was a hard pill to swallow that we would walk away with so little. So basically what this lawsuit is all about is forcing the seller to pay the buyer's agent commission in order to participate in the MLS. So the outcome, no matter which way it goes, could have major consequences for the real estate industry and profession for years to come. The plaintiffs are home sellers in Missouri, represented by class action attorneys. These home sellers used an agent who listed their home in one of the 4 MLSs, and the class action attorneys representing the plaintiffs alleged that commissions were paid by the sellers. The commissions paid by the sellers are too high, resulting in the listing brokers offering compensation to buyer brokers. So what's really at stake here is the way that compensation is made from listing broker to buying broker. So this is going to change fundamentally the way real estate commissions and real estate companies operate across the country. And of course, once this was settled, the attorneys immediately filed a new lawsuit against Douglas Eielman, EXP, World Holdings, Redfin, Weichart Realtors, Compass, United Real Estate, and Howard Hanna. So what this is going to eventually do is attorneys all across the country are now going to be suing, most likely going to be suing every real estate company, every real estate association, because this precedent has now been set. And what this could potentially do is eliminate the eliminate the buyer's agency altogether, because a lot of people will drive by a house, they'll see the sign, they'll call the realtor and say, hey, I don't have a realtor. Will you knock 3% off the commission? Because most people know that's what agents get paid in order to represent them as a buyer's agent. So this may eliminate buyer agency altogether. It may just become a seller agency type of market where the seller's agent does dual agency work for the buyer and seller for only the one side of that, or that 2.5 or 3% commission, whatever it is. And then what's going to come into question is what's the rate now going to be for commissions? Are people going to now start pushing back? And is this going to become more flat fee type stuff? Does it make sense to pay 2.5 to 3% for $1 million home versus a $400,000 home? So these are all the questions that are coming up that are going to fundamentally change the way that the real estate companies do business moving forward. So big news with the success of this lawsuit, this class action lawsuit. The Big Tobacco, some of the lawyers who were involved in Big Tobacco are the ones that took this case up. A lot of people did not think they would win. NAR, the National Association of Realtors, did not think they were going to win. But a lot of people do not like paying real estate commissions. So there's a lot of public appetite to get rid of those. In other news, zombie foreclosures are on the rise, and seeing that this is October, we just went through Halloween. Is this something that's really going to affect the housing market? The number of vacant foreclosed properties, zombie foreclosures, so those are vacant properties that have been foreclosed on, reached nearly 1.3 million homes in the fourth quarter of this year. So let's put that into context. That is just one in every 11,412 homes nationally, or about 1.27% of all the properties. Just to put that in context, 2008, 2009, there was probably 10 to 20% of the housing supply that was in foreclosure. A lot of this is coming off of the pandemic foreclosure, forbearance, and things like that. So this isn't a huge thing that's going to really affect the housing market, but you're going to hear a lot of people talking about zombie foreclosures because it's in the news, and that it's going to tank the housing market. There isn't enough of it out there. There still is no inventory. If you brought all of the short-term rentals, all of the zombie foreclosures, if you just bring all that to the market all at one time and put it up for sale, you would probably bring potentially the inventory levels back to normal in most areas, and all of that would get absorbed because most of these properties, 95% of the homeowners had some equity in their homes, and about half owed less than what their properties were worth. The ongoing strength of the U.S. housing market continues to benefit neighborhoods around the country. So anybody who needs to sell, most likely in most markets, can sell. And of course, there are going to be some houses in some markets that you can't give away. So again, it's all hyper local. Every market's different. So when will home prices drop? 6 economists have differing opinions. Moody's Analytics say home prices will fall by 10% peak to trough, mostly by the end of the year. Mark Zandi, he's very bullish on house prices falling. So he's bearish on the housing prices overall. And he thinks that rates are going to fall. So very interesting perspective. Goldman Sachs is saying house prices will fall for the rest of 2023. Again, a lot of these economists are thinking that the 10-year is going to drop, and lower interest rates are going to drive more inventory, which is going to bring prices down. That's their thinking. I'll tell you what I think in a minute. LPL Financial says a modest decline in prices by the end of the year. CoreLogic says home prices may fall over the next few months. And Realtor.com says home prices will recover by the end of the year, which is what we're seeing. Home prices are still up year over year and month over month right now in a lot of areas. National Association of Realtors says home prices will inch up into 2023. So the economists and the academics are saying prices will come down. The practitioners are saying prices will go up. And, here's what I think. Based on what's going on right now, the Treasury has detailed their plans to issue and step up their bond sales to manage the growth of the debt. The country is borrowing hand over fist as fast as they can. Almost like $1 trillion or 1.2 trillion, 1.5 trillion, whatever it is over the next 8 to 12 months to replenish the Treasury general account and things like that. They're having to issue bonds to cover that. And the more issuance there is in conjunction with the Fed rolling off the balance sheet and selling their Treasury holdings puts pressure on bond prices, brings prices of bonds down, raising the yields because bonds price opposite to the yield. So if yields are up, bond prices are down, bond prices are down, up, yields are down. So in order to attract people, you have to offer a higher yield because there just isn't enough appetite for all the issuance that's going on out there. And especially with a strong economy and other places for investors to put their money, that yield has to be attractive to attract that capital into the markets. As we look at things today, the 10-year has dropped a little bit to 4.8, testing this lower range. The 2-year is still at 5%. So the big question is, will this trend on the 10-year continue and reach that 5% level again, or is it just going to kind of range in here? And again, a lot of what goes on in the economy is based off of that 10-year Treasury mortgage rates. Some commercial real estate loans are based off the 10-year, others are based off the Fed funds rate. And we know that the Fed is going to be staying higher for longer on rates to get inflation under control. And again, U.S. CoreLogic S&P Case-Shiller Index, House Price Index, annual growth regained speed again in August, up by 2.6%. So actual house prices on the ground, a lot of people say, oh, that's lagging data that, doesn't have September, doesn't have October, and prices are going to, drop as we go in. Well, year over year, they're still up. And again, across the country, even from peak pandemic levels, we're still up 20 to 50% in the residential housing market. As far as commercial real estate goes, commercial real estate is coming under pressure more and more. The longer the rates stay higher, the more pressure that's causing. There's rising insurance costs, rising taxes, operating costs. It's putting a lot of multifamily and commercial property owners under pressure. So you're going to see a big wave of foreclosures and people giving properties back going into next year. A lot of banks are going to want to get those off the books by the end of this year to clean the books up. So there might be a lot of distressed sales going into the end of this year. And then next year will be very interesting in the commercial and multifamily real estate market. You're hearing a lot of LPs out there that have syndicated multifamily and commercial deals that are doing capital calls, trying to raise funds to keep their deals afloat through the end of the year to get into next year. Banks do not want these properties back. So it's very interesting, dichotomy in that commercial real estate market right now. Some lenders want them off the books. Other lenders don't want to touch them. So it's a very interesting time. But again, it's not something that's as systemic as the 2008 housing market was in the subprime loan crisis. It's again, it's a $30 trillion market. About 1.5 trillion to 2 trillion of that is at risk. So it's not a significant amount. And the equity investors are the ones that get wiped out. The banks will write them off. And the Fed and Treasury have put vehicles in place, tools in place to help the banks offset those losses. So this is your weekly real estate market update. I will see you on the next video. If you want to make $100,000, $1 million, $100 million, anybody can do it.